Hey, I'm Stephen and this is Solving the Money Problem. If you're new, welcome. If you're not, welcome back. So guys, different format today. My philosophy here is done is better than perfect. So we're just going to do one take, no script. I just wanted to get a few thoughts out there and share with you guys what I'm doing with my money and my investments at this point in time, given the economic disruption where I see things sort of headed in the future. Now, this is not investment advice, okay? The whole point of this channel is just for me to share what's in here, what I'm thinking and doing regarding my investments and my financial situation, okay? Keep that in mind. Now, basically, what I want to talk about today is a few major decisions that I've made very recently that have been enabled by some policy changes. So if you don't know, if you're not familiar with my story, and even if you are, just a quick bit of background. Retired a couple of years ago on the back of business and real estate. I own some property in Australia near Sydney and near Brisbane. What's happened recently in Australia, some of this will apply to you in certain ways. Like, this isn't an Australia-centric video, but I think you'll be able to map some of the actions that I'm doing and map those onto situations, and you'll be able to see some sort of parallels to opportunities or, things, avenues that may be available to you. Again, I'm not advising you to do what I'm doing, but just to teach you guys and help you to learn a little bit about how an investor looks at opportunity in a time like this. So that's the point of this video. Oh, hey guys, I almost forgot. For the US residents, the offer from WeBull, which is that you can open a new account and get up to 2 free stocks when you deposit any amount, it's been extended until the end of this month, but I'm not sure if it goes past that. So I don't know if the offer is still going to be available, but check the link in the description if you'd like to check it out. If it's still available, awesome. And if it's not, I'm sorry. All right, let's get back to it. Okay, so I have a number of properties in Australia, and the rental income from those per annum roughly in Australian dollars. All these are going to be Australian dollars, so I don't have to convert on the fly. It'll be easier. Look, it's about 60 cents Australian. 1 Australian dollar is about 60 US cents roughly now. So basically halve it and add a little bit and you'll be there for US dollars. So basically I've got $100,000 a year of rental income, roughly. My tenants now, because of a rental moratorium, which is basically a pause on rental payments, mean that for up to 6 months, if my tenants chose not to pay rental income, I'm not able to evict them. I wouldn't want to do that anyway to tenants in a situation like this, but just legally speaking, that's not an option, which means that my cash flow suddenly could drop by $100,000 per annum for 6 months, so $50,000, right? That's a lot. Now, as a result of that, the banks are now allowing certain people in certain situations with mortgages to put a pause on repayments on those mortgages for up to 6 months. And there's a few other dials that can be tweaked in some situations as well. It's not a free lunch because the interest you would have paid will be capitalized onto the end of the loan. Like in my case, if I was to put my loan repayments, give or take, they're also a 6-figure sum, right? So putting those on hold for 6 months would allow me to accrue additional savings of about maybe $40,000 or so. So not a insignificant sum of money. In addition, people in Australia now are being given the opportunity to access up to $10,000 from their retirement fund, their superannuation, this financial year, which is before July, and then also again into the new financial year, which is in July. So within a span now of about 3 to 4 months, I potentially have the opportunity to put in my pocket an extra 60,000 Australian dollars. Of course, if I have tenants who aren't paying rent, some of that's going to have to go to cover that cost. But the point here is that it's an amazing opportunity defensively. I always say, dig the well before you need the water. Okay, you always want to have the resources available before you need them. So if there's ever an opportunity on a loan that I have to increase the loan amount and put the money into an offset account, which for those that don't know, it offsets interest. So effectively, if you put money in an offset account, if you don't use it, you don't pay any interest on it at all. It costs you nothing to have there, but it's accessible in the future. And if you use that money, then you pay interest. It's kind of like a line of credit, but not identical. So always having available access to capital in case of situations or opportunities, it's always smart to do. Always digging the well before you need the water. That's my philosophy on investing, right? I'm very defensive in that regard, but also very offensive when the opportunity is there. In this situation, I've got over $2 million of debt, right? So in this situation, I have an opportunity to put pause on those repayments. Ultimately, I'll pay a little bit more in the long run in interest, but I'm going to take up that opportunity because it's going to enable me to be proactive, to build up even more of a defensive buffer, even though I already have one in place. If you haven't seen my video, Time Buffers, I wish you had watched that a few months ago. It's all about having a big safety net of time. How much time can you survive for in a worst case scenario? So I've mapped all this stuff out. I'm sitting pretty. However, the ability for me to put those loan repayments on hold is substantial. It's going to allow me to accrue even more capital, which could get me through uncertainty, but more on that later, but also opportunity. Being able to also withdraw up to $10,000 from my superannuation, my retirement fund this financial year, and then next means that in total $60,000. I'm going to do both of those actions, and the reason is this. I want to build up as much of a safety net as I can. If the opportunity is there, that's a fundamental, that's the first layer, right? It makes me in a safer financial position. And there's no penalty to me other than a tiny bit of extra interest, but to me, not worth it, because I will probably put these funds to better use. And if I don't put them to better use, it's only because I needed them for even more defensive stuff. So it either makes me safer or I can do more with those. So anyway, what's going to happen now, and the reason that I'm withdrawing this money as a safety net, but then also for opportunity, the opportunity here is enormous in the future, at least for me in my situation in Australia. And a lot of this will apply to people around the world. Trillions of dollars are going to be pumped into the global economy to keep things ticking along, okay? Central banks are just going to be printing money. It's absurd. This is a very rare event, okay? Stuff like this can occur, of course. We could have a meteorite impact that freaking wipes out all life on Earth tomorrow and extinction level events happen, okay? So I'm not saying that this will never happen again. What I am saying is it's very rare. Pay attention. This is a huge opportunity. And if you have the resources and the mental faculties and the temperament, this could be a period where you become absurdly further ahead on your financial goals than you could have otherwise become. So if all this money is getting pumped into the economy, we're going to have inflation. Now, effectively what happens here is it really sucks if you have cash, because the value of that cash erodes away. You know, $100 becomes worth hardly anything. It's worthless. You know, you're going to be going to the grocery store and paying like $50 for milk if you have lots of inflation. Look to places like Venezuela, Argentina for sort of recent examples of like hyperinflation. Now, if you have inflation and you've got fixed debt, okay, let's say you owe $1 million on property, but the currency inflates, right? You've got all this inflation and suddenly the currency is now worth half as much. That means your debt's effectively worth half as much. And so it's almost like somebody's paid off half your debt, except you haven't actually had to do anything, okay? The whole concept here is you have a fixed amount of debt. You lock in the amount of debt that you have. So then if there's inflation, it actually erodes your debt, just like it erodes the value of cash. So people borrowing money are going to benefit enormously. People who already have existing debt will benefit enormously. If that's attached to assets that inflate, it's just going to be a huge bonanza, okay? If I have access to capital and I don't need to use that in a defensive situation, which I think is probable, but again, I'd always like to be proactive anyway. If the money's there, dig the well before you need the water. And then if the water I need isn't to stop me starving, you know, and dehydrating and dying, but to just refresh myself a little bit more, the opportunity there is going to be massive, because I potentially will be able to have another $60,000 available. I could put that into real estate or other assets, whatever's available, be paying effectively no interest on that, not have paid income tax on that, have deployed that money, which basically came out of thin air, right? I didn't have to earn extra money to do this. I just was able to rejig my cash flow temporarily. So if I'm able to do that, I might be able to purchase assets today where it's going to be extremely easy to borrow money, because lenders need, like, the economy needs to come back to life after this, right? It's going to be very cheap. We're going to have extremely low, if not negative, interest rates. So like, imagine that, you know, you can buy a house that costs you absolutely nothing to pay the mortgage, and then you get rental income out of nowhere. Like, it's going to be pretty fucking crazy. Let's be real. It's going to be nuts. Now, if that's the case and I can accumulate more real estate, I'm going to benefit enormously, because I already have a couple of $1 million of debt. That debt's going to erode as there's inflation. Huge bonanza, huge bonanza. And then if there's other opportunities as well, there might be some stocks that get absolutely pummeled. I might be able to do that. I might be able to use those resources to invest in my business. But on top of that, I'm also going to use some of that money to just put into the economy, try to help people out. Like, at the moment, what I'm doing, I'm in South America, the food delivery service here, Rappi, I'm tipping my drivers like quintuple, 5 times more than I was tipping previously. And that's a really meaningful amount for them. I, being a gringo, my resources, I'm like a rich person here equivalent, just because there's such a gap in the value of wages here and earnings and stuff. So tiny thing for me, huge amount for them. So I'm also trying to accumulate a little bit more cash so that I can feel comfortable to be a bit more lavish with my spending, because I'm so frugal and so tight. But planning already to buy some equipment, you know, just in some clothing, just all sorts of stuff that I do not need, and it sort of goes against my fairly minimalist values. But I'm going to roll some money through the local economy here and also do my part wherever else I can as well, because it's the right thing to do. I'm in a position to ease this burden a little bit, and at the same time to take advantage of it, because the opportunity, it's just going to be so easy to get credit for a short period of time until the regulators come in and go, whoa, hang on a minute. We don't want this person earning $50,000 a year to rack up $4 million of debt on investment real estate. Like, that's a bit crazy. It will come in, but there's going to be a window here where it's like, just give them just take the money, whatever. We'll fix this later. Take the freaking money, buy the shit. Yeah, just take the money. We'll fix it later. Until that happens, there's going to be a window here. It could be a couple of months, 6 months, I don't know how long it's going to be, but there's going to be just a huge window of opportunity for people to borrow at really, really cheap rates, and you may be able to do things like historically you've never been able to do, like fix your interest rate in for like an absurdly long time at a stupidly low rate. You might be able to fix loans depending on how much of a decrease we have in like interest rates. You might be able to fix loans for like 5 or 10 years at like 1 or 2%, maybe less, maybe 0%, like who knows. But the point here is the cash flow is just going to be just stupid. It's a property that might have returned you 5% rental income, might have 1% per year in expenses. You get a 4% return on that. Then you've got to take your interest repayments off. If your interest repayments were 4% before, cash flow neutral. If they're 2%, now you're positive by an enormous amount, like thousands of dollars. People who take advantage of this, who have the resources, who can buy under value, pull the equity back out, and then go buy again using that equity. And again, I'm not saying go do this. This is not investment advice, right? This is just what I personally am thinking about the opportunities that are out there. Somebody theoretically, while the window's open, while the regulators haven't come in really tight on borrowing, could effectively draw some equity and recycle it through a number of properties. If they buy under value and do some quick cosmetic renovations, can draw that equity out, etc. Use that same money to acquire a number of properties, lock in the cash flow for an absurd amount of time where you've got basically certainty that you're going to have positive cash flow significantly that accounts for all downside, which means that you are actually in a stronger financial position by having acquired this asset and the associated debt than you are not. You can just repeat this and put yourself in a better and better and better financial position, not buying stuff that's costing you money to hold, but like strong cash flow assets, strong cash flow property. And if you can just keep doing this opportunity right now, absurd. Somebody on a reasonable salary with a little bit of savings to get going or some equity available can do something very substantial. The reason that this is going to be available and as an opportunity is because the economy is screwed, okay? They're running out of options, okay? Literally, the only thing to do now is just print freaking money. Just insane amounts of money. Trillions and trillions, tens, if not hundreds of trillions of dollars of money, right? Absurd amounts. We're just getting stimulus on a almost daily basis now. Slight exaggeration. You get the point, right? This is serious. The amount of money that's going to be going into the economy is absurd. That means that we're going to have inflation. That means that people who've got debt and assets are going to benefit enormously. People who have savings are screwed. For me, personally, huge opportunity to play defensively, accumulate some more capital, and if I don't need that, if the world doesn't fall to pieces, if the universe doesn't collapse and implode, then I have the opportunity to deploy that capital while the borrowing is super cheap. I'm going to be able to potentially leverage, pick up assets that are putting thousands of dollars every month into my pocket, multiple of these assets, and then lock in the cash flow. So like even if the rent was to fall by like 50% or something, still it would be cash flow positive. Still it would be putting money in my pocket. To be able to do something like that, just absurd opportunity. Again, I'm not advising you what to do, what not to do. Just sharing what I'm thinking about the situation, what I'm personally doing. So in summary, I'm going to put all of my mortgages on pause. I've applied to do that. I'll hear back within about 7 business days, just to build up my cash flow, defensive at the foundation. All right, it's always better to be in a safer position and have built the well before you need the water. And then if I don't end up needing that cash, great. And I may do so because my primary source of income at the moment is YouTube revenue. Let's say that marketing budgets get pulled or advertising gone. Suddenly no one's like bidding on ads. My CPM just disappears and I don't earn revenue, right? It's very real. And then if partners, affiliates, it's very fragile, okay? So there's a real potential that cash will be helpful to get me through, future period. I don't see that as inevitable or likely, but it's a possibility that I have to acknowledge. But if I'm being honest, I think that this is going to be the biggest opportunity for investment and wealth creation for me that has occurred in my investment lifetime, which is now 10 years. Okay, I've been investing for a decade, since 2010. That's pretty cool. I'll keep you guys posted, let you know what I end up doing, whether or not I'm approved for those loan pauses and the the retirement fund withdrawal. I'll keep you posted, let you know what's going on. But I just wanted to share that, putting everything on pause, withdrawing the money for super. Going to just have that available and keep an eye on everything. I've also got a ton of mortgages, separate mortgages. The fixed interest period on some of those, which are fixed interest, others the interest rate varies and changes, but the fixed interest expires later this year. I timed that pretty well. I kind of thought in my mind I can see about 3 years into the future. This could have happened earlier and things would have changed earlier, but I thought 3 years is a good time for me to fix in the cash flow. I think rates will be lower in the future anyway, because I thought the economy was turning to shite in Australia, which is true, which was true before this, so this is just compounded things. So they're coming off, which means that I will have the opportunity then to drop onto a variable rate that's much lower, which means my cash flow is going to be even more from my real estate, right? I've got a couple of $1 million of debt. Let's say it's $2 million of debt, right? If I save like 1% on that per year, 20K, it's pretty epic, right? So it's going to have a huge impact on cash flow as well. That cash flow can also be deployed to further asset acquisition, etc. So that's coming as well. I don't really think I have too much more to say on this. I just want to make sure that I've covered off all the points. One other point which I just wanted to mention too regarding the rental payments being put on pause. You can't default now on a mortgage because you can press pause on your mortgage. You can't get kicked out for not paying your rent, and the Australian government has created this JobKeeper payment, which is effectively going to pay most Australians, basically any business owner who has employees, it will pay them per employee more than a minimum wage as a subsidy to pay their employees a salary even if they're not working through this period, right? So all of those combined right now, there's no way that this is going south. Like, there's going to be some short-term pain. It's not going to be good for everybody that's involved in the situation, okay? I understand that. But in the long term, this is not going to be the end of the world, because the government cannot allow, the central bank, who's really responsible for everything, cannot allow this to turn to shit. Just simply can't, okay? And it won't. What will happen is so much money is going to get pumped in to make sure people keep jobs and make sure money keeps going through the economy and make sure that people are spending and spending and spending, that businesses are still surviving, right? That the money needs to keep flowing through and people have to be incentivized to spend and borrow money. We're going to have super low rates. The people that take advantage of this, that aren't like pooing their pants out of fear, like, oh my gosh, the world's ending, help, I'm scared, hold me daddy. The people that are actually like, hang on a minute, let's look at the facts. What's likely to happen? All this money coming in, inflation, going to be cheap debt for a long time. They won't be able to rise interest rates. Like, here's the thing too, like if the central bank, which in Australia now the interest rate is 0.25%. I heard this analogy recently that was a great example. If it's 0.25% now and it increases to 0.5%, 0.5%, it's doubled. The interest rate is doubled, okay? Now, if interest rates are like 10% and you have that same incremental increase, it's nothing. Like, it's literally nothing. It's 0.25%. I don't even know what that is. It's like a 40th, 1/40th. Like, it's nothing. It's literally a nothing increase, okay? Whereas if it's jumping that same amount, but the interest rates are so low, imagine you had a bunch of debt and suddenly your interest rate doubled, okay? It can't happen. It's not going to happen. So these interest rates are going to stay really low for a long time. It can't go any other way. If anything, the Reserve Bank in Australia is not going to increase interest rates if it knows doing so is going to destroy the housing market, which would then destroy the construction market, which would then destroy the entire freaking economy. Like, they're not going to do that. So it's like, what could possibly go wrong here now? I can borrow money. If I do it sensibly and I have my safety nets in place and buy stuff that's got strong cash flow, and I manage my money, I mitigate my risk, I look at fixing loans for long periods of time to ensure cash flow. I have plans in place to get me through. I've got my strategies to weather any storms. I've dug my wells before I'll need the water. It seems to me that I can go out and accumulate assets, as many as I can, while the opportunity is there. I can accumulate debt to acquire those assets. I can from day one have extremely strong cash flow, and because of the rate discrepancy versus the income, I can have such a big buffer built into each of those that it would take a disaster an order of magnitude worse than this one to put me in any financial strain. Like, imagine something 10 times worse than this. Like, that's some serious stuff, right? If that's the case, if it would take something of that scale to put me in a tough situation, then I'll take advantage of this opportunity to accumulate as many assets as I can, as much debt as I can for investment, and I will then benefit from the few options that are left for banks around or central banks around the world to do anything, which is just to pump money, just print money out of nowhere, cause a huge amount of inflation around the world, and benefit enormously. Again, I don't want you guys to take this as investment advice. It's just what I'm thinking and what I'm doing. It is what it is. Again, I really feel for everyone who's suffering through this, and if you've lost a job, if you're a business owner that's really, stressing out about how to keep people on payroll to feed their families and stuff, I really empathize with you. But from an investment point of view, this opportunity is very rare. You may not get it again. You may, but think about the worst case scenarios. Okay, think about what can go wrong. What's likely to happen? Where do we go from here? What happens if this happens? What happens if that? Think your way through some scenarios and see what makes sense for you. Do you believe that there'll be inflation? Do you believe that there's going to be more money printed? Do you believe that central banks are going to let economies collapse? Do you believe that there's just going to be a huge surplus of money out of everywhere? Just people's rent being paid, people's food being paid for, people being paid, like businesses being paid to keep employees paid. I don't see this going any other way. If somebody does, please let me know, okay? If you're a central bank and you have this option, print money and everything's fine for now and you've got a bigger problem to fix in the future, but sort it out then, or don't print money and let everything turn to shit now, and millions of people die of starvation and the whole economy, what are you going to do? Let's be honest, okay? They've got very few other options. Really, the opportunity is just so stupid. I can't keep repeating myself. And for the record, I've also mapped out my plan for my savings and my investment now for the next 6 years. I've modeled that out based on a certain amount of income, how much I can save, what returns I'm expecting to get on that as well. I've got a plan in place now. So my key goal is to earn as much income as I can reasonably do, without going to lengths that would violate my values. But I'm certainly going to focus on earning revenue and earning income, because that will be deployed into accumulating assets in this next period and benefiting enormously from the inevitable inflationary period I see coming forward. Nothing else to say. I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. Thanks so much for watching. Let me know your thoughts in the comments below. Do you agree or disagree with anything I said? What are you doing to play defensively and also offensively during this time? And of course, if you have any ideas for future videos, let me know. I read all your comments. P.S. If you're still watching, you're awesome. This channel has kind of blown up since it launched, and I'm working on making the best possible content for you guys, but it takes time. Consider supporting the channel at patreon.com/solvingthemoneyproblem so I can continue creating content for you guys. There's a link in the description. Either way, the best kind of support is you being here and watching, so thanks again.